The circle has begun. There is a lot of money in circulation, which is good for risky assets because the Fed isn't sure what will happen. A rise in the ISM to above 50 would also show that the Fed wants CEO confidence to return, which we think will lead to more jobs. The ratio of mortgages to tenure should go down, which should make homes more affordable. And he's making it less valuable to have cash on hand. It's getting less yield, which means cash will leave the market, which means danger is on. To put it simply, I believe the three most important things to pay attention to are MAG7 and AI stocks, crypto like Bitcoin and Ethereum, and interest rate sensitive groups like small caps and financials. But I would say that in the past, the first big effects have been changes in the availability of money and the flow of cash into the economy. Since the Fed said it would be cutting interest rates, crypto, Ethereum, and Bitcoin have been in the lead. That's a lot like what happened in 2024 when the Fed cut rates in September after a long break. I'm going to tell everyone that when the Fed cut rates in September of last year, XRP went through the roof, way beyond what Bitcoin and Ethereum did. Tom Lee forgets this. I don't think it will be any different this time either, since XRP is set up to fully take over the industry. They'll be working together with BlackRock. They're putting out a lot of ETFs and other things as well, but I'm getting off track. Watch this video because Tom Lee talks about a lot of important things you should keep an eye on. Please pay close attention. Your life will change. In order to start the movie, let's talk about the big picture, since the Fed is currently easing policy. The Federal Reserve announced a 25 basis point cut on Wednesday. I thought it was dovish because the Fed said that more cuts are on the way, which is part of an easing cycle, and they also said that tariffs were not as much of a cause of inflation as they thought they would be. That's why I'm still in favor of temporary inflation. We thought that stocks would go up after the Fed meeting, and we saw that there was good follow-through in both the Nasdaq and small caps, which did better than the S&P. For more information, visit Fundstrat. In the 24 hours after the Fed announced the cut, the Nasdaq went up 1% and small caps went up 2.5%. Your next question might be, will stocks keep going up? We think the answer is yes. I'm going to use some numbers from Ryan Dietrich at Carson Group. He says that the S&P goes up 20 out of 20 times when the Fed cuts rates within 2% of all-time highs, for an average gain of about 14%. Your next thought is likely to be what will do better after the Fed. Here is an easy plan we want to give you. Money supply is low because the Fed is dovish. That's good for risky investments. Another thing we believe the Fed wants is for CEO confidence to rise again. One way to see this is for the ISM to rise above 50, which will lead to more jobs. The ratio of debts to rents should go down, which will make housing more available. And he's making having cash less useful. Less return means that cash will leave the market, which means that risk is on. To put it simply, I believe the three most important things to pay attention to are MAG7 and AI stocks, crypto like Bitcoin and Ethereum, and interest rate sensitive groups like small caps and financials. But I would say that in the past, the first big effects have been changes in the availability of money and the flow of cash into the economy. It has been crypto, Ethereum, and Bitcoin that have led the way. That's a lot like what happened in 2024 when the Fed cut rates in September after a long break. MicroStrategy, ticker MSTR, which went up 6% on Thursday, is the stock that is most closely linked to Bitcoin and Ethereum. Bitmine, which holds the most Ethereum in the world, is the most leveraged stock for Ethereum and went up 5%. Many of you may think that markets are in a bubble since the Fed is cutting rates close to all-time highs. But as we said, that's happened many times before, and stocks still went up 20 times out of 20 times after that. But I believe the best way to understand it is to look at Nvidia, which is like a granny shop. Nvidia's PE, on the other hand, is 26.6 times. Now, do I think that costs a lot? I don't. First, this figure shows that it's in the middle of its range for the last 5 years. But remember that Walmart and Costco trade at 34 times and 48 times earnings, respectively. These are not nearly as rare or special as Nvidia. Nvidia is the world's most sought-after company right now because they make a chip that all AI companies need. I don't think Nvidia is in a boom until its price is the same as Costco's, as it turned out. Cisco was making $165 a month in September 1998. Why do I choose September 1998? That sounds a lot like 2025. The Fed took a long break, and then in September they made a cut. Nvidia's PE went up to 210 times in the next year, and its share price went up to $80. The price of its stock went up 5 times, and its PE went up 4 times. That's what I call a bubble. Today, Nvidia is worth 26 times what Ford makes, so we're not quite there yet. Look at how people feel more than anything else. It's still bad that AI gets bulls less bears. at an all-time high, there are more bears than bulls. In fact, markets have been at all-time highs for 7 weeks now. Still, people feel bad about things. People who are bearish at the highs can't really say that we're at the top. Let's talk about how well granny stock did. Over the past week, Oracle, Tesla, Vistra, Lam Research, and Palantir have been the top 5 traders. All of them have to do with AI, but Oracle went up because it had good earnings. And Tesla is up because Elon Musk bought $1 billion worth of shares privately. Garmin, Amazon, Robinhood Markets, Cadence Design Systems, and Netflix were the 5 companies that did the worst. For stocks like Cadence, some of this is people taking their money off the table. But when it comes to themes, the best ones were energy and cybersecurity, which was led by Palantir and Vistra, MG Genova, and labor shortage, which was led by Oracle, Tesla, and Lam Research. It also worked with seasons. Again, both Oracle and Palantir were marked as holiday trades, but both Palantir and Oracle have been a weak spot for a long time. You should all know by now that the AI race in the blockchain business is very important. That's why you need to pay close attention to what I'm going to say next. Every day I check in on Pensa to see what's going on, and I can't help but picture all the similarities between it and Bitcoin back in 2012. The video for today is sponsored by Next Gen Digital Platforms, which just went public with a 4-part business model that includes AI, decentralization, compute, and Tensor. Barry Silbert, a billionaire investor, compares Tensor to Bitcoin when it was worth less than $500 per coin. Customers can buy the stock through Fidelity, Schwab, E-Rate, and many other internet brokers. It will also be adding Bitcoin, Ethereum, and TA to its bank sheet to get family offices and money managers who own these assets to buy shares of NXTDF in return for Bitcoin and Ethereum. The company will also issue more debt. Second, NextG Digital Platforms also wants to start mining. The company is also looking for ways to stake, validate, and invest in the Potenza network, such as by investing in the subnets or providing computing power. It's all about this. If you think it sounds interesting, I'll leave a link below for you to discover it for yourself. A lot of different people are talking about this and big things are coming up. Click on the link below. Let's watch the movie again. For instance, which have bought about $20 billion worth of Bitcoin so far this year. MicroStrategy, that's almost $20 billion more coming in.